One. It is Scott Wohlers with Riverplace Capital. It is Thursday, June the 11th, and I wanted to take just a few moments to talk about what an interesting week that we've had in the marketplace, and wanted to talk about kind of what's moved markets both high and down over the last 7 days since we last spoke. And it all started last Friday with a unbelievably great jobs report for the month of May. Many economists had been expecting a loss of upwards of about 8 million jobs for the month of May. However, we added 2.5 million jobs for the month of May, which is a much higher number and about a $10 million difference, or $10 million job 10 million job difference than what we were expecting. And so you saw a huge market rally last Friday off of the backs of that jobs report, as unemployment rates were expected to be close to near 19 to 20% is what many economists were expecting. However, the real number came back around 13. The real number is 13.3% unemployment rate, so much better than economists had feared. And so that drove the markets much higher on Friday. You saw huge volumes in the New York Stock Exchange as well as on the NASDAQ 1000. And you continued to see that very broad-based rally of a lot of the beaten down sectors and names that have been beaten down severely during this downturn really rally and lift the markets higher. And as we entered the start of this week, we kind of saw a pause in the markets. We had a Fed meeting yesterday on Wednesday, and the markets were kind of paused. We had a nice rally on Friday. We're going to just pause. We're going to start to maybe tread some water here and see what the Fed has to say on Wednesday, as well as looking at what some other headlines might be from the healthcare side and things along those lines. And Chairman Jay Powell came out and spoke yesterday. And one of the things that he said is he anticipates seeing rates remain at zero, roughly zero, through until 2022. And so what that has done is put a pretty big dampener on the markets, as the markets were betting on a faster recovery and a more quick recovery and a V-shaped recovery in the economy. And you saw the chairman come out yesterday and kind of say we're going to expect longer rates of double-digit unemployment, and it may take the economy longer to get started. And so you've seen selling pressure today, and very severe selling pressure as well. Now, you still are around the flat line from last week to this week, and just giving back your gains from last week. And one of the things that we want to reiterate to people is we are in a time where we are going to start treading water, and we are going to be very headline driven. We don't have any earnings. Companies aren't giving us any guidance, and we're going to tread water and move both up and down on headlines until we start getting some earnings reports in from companies. And one of the more important things about the earnings call is not with companies moving into the next quarter, is it's not going to be what the company's actual earnings were, but it's going to be on what the CEOs have to say about their outlook and what they're seeing from customer demand, product demand, and their outlook for the rest of the year. Investors are very interested to see what that looks like moving forward into Q3 and Q4 of this year. And so until then, expect to be very, very headline driven in the market. And we have seen a kind of a pause to that broad-based rally as we're moving down. The large growth tech names are still holding up much better than your value names that were recovering very strongly. Your sectors like industrials, materials, the financials, they're not holding up as well as we're seeing the big sell-off today, and we kind of saw a pause on that switch. So as always, if you have questions about what's going on within your individual portfolio, what's going on in the markets, or what we see, feel free to give us a call anytime at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks so much.